Hello, I'm Juliet Sarli. In this week's edition of IG Macro Intelligence, we take a deep dive into the Israel-Iran conflict and ASX stocks to watch. Escalating tensions between Israel and Iran have seen global investors adopt a cautious approach while oil prices have spiked. In the immediate aftermath of news Israel had attacked Iranian nuclear facilities, both Brent and WTI oil contracts spiked as much as 13% to their highest levels since January. The increase in tensions is raising concerns supply could be severely disrupted, with the Strait of Hormuz a critical artery for global oil shipments. Roughly a third of the world's oil supply is flowing through the strait.
The oil market will need to see is a very clear de-escalation, and this would probably involve the US stepping in and managing to persuade both sides. As we saw the Biden administration do that twice last year on two occasions, in April and October, when Iran and Israel directly attacked each other. I think Trump is far more incentivized to bring this to a halt quickly. But how quickly he's able to do it, I think there's a little bit of a question mark there.
Well, the spike in oil prices lifted Australian energy stocks to their highest levels in almost a year. The S&P ASX 200 Energy Index had one of its strongest sessions in 4.5 years on the back of the renewed attacks. Shares in Santos were also boosted by a takeover proposal from Abu Dhabi's national oil company ADNOC, worth around 30 billion Aussie dollars. Year-to-date, Santos shares are up around 14%, and ASX TradeWatch data show they're in a medium-term rally, with the 5-day moving average above both the 20 and 50-day moving averages. Most brokers are bullish on the stock, with the average recommendation a buy and an average price target of $7.31. But MST Marquis Saul Kavonovic cautions that the takeover deal is not yet a done deal.
Risk is this FIRB approval. Santos owns a lot of critical national infrastructure, both on the East Coast and the West Coast. We expect that Jim Chalmers will place a lot of scrutiny on how much of that we want to be lying in the control of a foreign government. I could see scope for the government to apply significant conditions on such an approval, including regarding potentially spitting out some of this infrastructure to a different player and making commitments regarding the domestic gas market.
Gaurav Sodhi, though, from InvestSmart, thinks shareholders should accept the terms of the bid.
You should take the money and run. This is, it still undervalues the assets. There's probably $11 or $12 worth of assets inside Santos, right, and that value will be extracted by the acquirer. But as a shareholder, you're not going to get access to that. So I would take the money.
Shares in Santos's peer Woodside Energy are down around 4% over the past 12 months. Evers and Partners, though, analysts suggest given the Santos takeover bid is likely to face major hurdles, investors should consider shifting into Woodside shares. Most analysts suggest holding Woodside at current levels. Morgan's is the most bullish. It has an add recommendation and a price target of $30.10, almost 16% above its current share price. Meanwhile, RBC Capital Markets analyst Gordon Ramsay suggests Ampol could benefit from a disruption to Iran's oil supplies. RBC is positive on Ampol's outlook with a target price of $29. ASX TradeWatch data show shares are in a near-term rally, but with a longer-term bearish trend, which implies investors should proceed with caution. And shares in Karoon Energy have outperformed over the past 12 months, up almost 24%. Brokers remain positive on the stock, with the average broker recommendation a buy and a price target of $2.01, according to Refinitiv, which is not far off current levels. US President Trump signalled at the G7 leaders meeting in Canada that Iran is open to talks to de-escalate the conflict. However, Israel's Prime Minister Benjamin Netanyahu has signalled strikes will continue. President Trump said it is painful for both parties, but I would say that Iran is not winning this war. However, long-term watchers of Middle East conflicts and the effect on global oil supplies are confident a deal will ultimately prevail.
In most recent conflicts in the Middle East, in fact, going back quite a long time, there has never actually been an interruption of oil supplies. There was an attack in Saudi Arabia from the Iranians a few years back that did hit a little bit of their oil infrastructure, but it didn't actually affect the amount of crude oil being shipped out of the Middle East. So there is a very strong historic precedent that oil supplies don't really actually get affected. It's in nobody's interest that this happens.
And that is your IG Macro Intelligence for this week. We'll see you next week.